So I'd like to welcome you to the NASDAQ trading psychology. So basically, let's put this into real life practice before we can actually go deep into content. So during this lesson, I like making an example of a driver's license and also a learner's license. Before acquiring your driver's license, you have to firstly start where? To your learner's license. So let's jump into the content. So balancing your emotions in line with trading NASDAQ, NAS 100, US tag, or US 100. So this part acts part of a learner's license because before acquiring your driver's license, you have to firstly know the rules, understand the rules, abide by the rules for you to be what? A successful driver. The same way as to apply these rules that I'm just about to teach you right now. You have to understand them, you have to acknowledge them, respect them, and abide by them all the time. So, as we know, I like using one of the rules that is always used in the driver's license department. So basically they always say keep left, pass right. The same way when it comes to NASDAQ trading, you always have to be disciplined as much as possible. So let's jump into our content. So the first point, when it comes to trading NASDAQ, you will encounter a lot of emotions. For these emotions to be easily controlled, you have to understand that trading is not a get-rich-quick scheme. As we know, NASDAQ moves around doing impulse moves and a lot of corrections along the way. So what you have to teach you to know and teach yourself along the way is that you have to understand that the more you constantly apply everything I'm just about to teach you right now, that is where you'll be able to stay here in a long run. So understand that in as much as NASDAQ is too volatile, that doesn't mean that you have to over-risk, because over-risking can lead you to blowing it all. So point number 2, you have to understand that trading is an investment, it's not a gamble. So when it comes to trading NASDAQ, people have a concept mindset that NASDAQ is high volatile, it will make me $1 million with just 2 days, like it can change my life in just 3 days of trading it. That's all a lie, because this is the reality of a person. The reality of a person is we are used to a mindset of having money in such a short period, but not thinking about the long run. But in the long run, if you can understand it, that means you can be a NASDAQ killer, only if you follow these rules. Point number 3, always use proper risk management. Point number 4, NASDAQ is one of the high volatile indices. It is advisable to have an account not lesser than $100 US. In South African rands, it is 1,500. Now, when it comes to NASDAQ, you have to focus on pips. You don't have to focus on what? On money. Now, let's put this into real life practice so that you can understand. So, as we jump in, for example, we're facing an impulsive move to the downside, obviously. From an impulsive move, we're expecting a correction. After the market is corrected, we also expect a downside continuation. But in the overall, we have to understand that NASDAQ only does impulsive moves. It decides each direction it wants to go. So meaning it can decide to go down. Instead of correcting, it can decide to continue with just a short breathing of time. So this is what happens. If you have $1,000 US account, this would make your account to manage the pending loss that's going to be going down or neither going up, to help you be able to sustain what your direction you have anticipated. So let's jump into our content. We have emotions that impact traders. So in most instances, I like starting with doubt. Doubt is because it is one of the most emotions that people face or encounter when they're starting to jump into trading Forex or into trading NASDAQ. It is faced by everyone. Trust me. This is what we always face. We always encounter in no matter how much you've made in the Forex market. So the reason is doubt comes when you're starting about trading Forex. You think about, will this work for me? Will I really make in the Forex market? Now, the Forex market was done in a way that it has to make you scared of even trying, because people are selling a lifestyle. It's scarce to see people selling results. So in that, we'd like to advise you with these following rules. So when you start facing doubt, you have to remind yourself that you have to trust in your own judgment. If you trust in your own judgment, that's going to be able to make you a successful Forex trader in the long run. Because what you'll be facing is this. If you anticipate that NASDAQ is going to be buying at this point, go for that. Never be afraid of being wrong, because sometimes you might miss on the good opportunities of your anticipations. Imagine, how would you feel if, for instance, we are in a flat channel, we're experiencing a push to the upside, to the downside, push to the upside, and also to the downside. And then you anticipate that if the market reaches this point, the market is going to be buying. and then you are like, nah, but no, NASDAQ is too volatile. Let me wait for it. And then remember what I said, NASDAQ only does impulsive moves, meaning if it goes up, you already missed on those pips. That time you think about entering your trade over here, and then the market decides to go in a different direction. Meaning what you have done, you doubted yourself. Hence I'm saying you have to trust in your own judgment, and you have to remind yourself that your opinion matters as always. Overall, you have to be ready for the learning curve. So in a low-key manner, we normally understand that learning curve is a good way of saying be ready for the losing curve. As you're about to start with your Forex journey of trading NASDAQ, we cannot assure you that in the next 3 days you're going to be a successful Forex NASDAQ trader. That's not going to happen. How we deal with things, that it takes consistency and it takes practice for you to master your craft. Meaning we're going to allow you to learn with small money. As I said before, the minimum amount that is requested of training NASDAQ is basically $100 US. In South African rands, it is 1,500. So that will be the first emotion that you're going to be facing when you're starting to trade NASDAQ. Moving to the second emotion, which is fear. Fear is one of the utmost dangerous emotion because it's false evidence appearing real. Fear occurs when there's pending loss or pending win. So basically, how does this happen? You know, normally when you're placing a trade, when it's in red, you normally say to yourself, oh, I'm losing, guys, I'm losing. When it's in a win, you're like, I am winning. I'm the top dog in the Forex market. Trust me, stop fooling yourself, man. Now we're giving you the real truth when it comes to the Forex market. There is what we call a pending loss, and there is what we call a pending win. So what is a pending loss? A pending loss is running losses on an active trade. What do we mean by that? We mean that if you are in a running trade, let me make an example. We're in a bearish channel. We buy low, we sell high. We buy low, we sell high, right? So when it reaches this point, I'm thinking about, what if I go for a buy? What if I go for a sell? But following your rules, you know that we buy low, we sell high. We buy at support and we sell at resistance. So when the market reaches this point, you're anticipating that now the basics are saying I should buy low, and we're having a confirmation of a 3 touch on our support zone. Meaning that when it reaches this point, we're going to be looking for what? For buying opportunities, obviously. Following your basics, it says buy here. You place your buy over here, and then the market decides to kind of shoot down for a second. And then that is when you're starting to anticipate that your direction was wrong. Trust me, let me teach you something different from today. In as long as the market hasn't yet touched your stop loss or closed manually, you are not in a loss. You are still in where? In a pending loss. There's what you call a pending loss. A pending loss is when you anticipated a direction, but your direction anticipated still in a red, meaning it's still in losses. It has not yet been confirmed as a loss until it hits the stop loss or it hits the take profit. I hope that makes sense. So point number 2, you have to understand that in as long as the trade hasn't hit stop loss or manually closed in a loss, it is still a pending loss. Not all trades automatically be in profits immediately after opening a position. Understand that it requires patience to see profits. That's the realest truth. It won't happen, for instance, in a bullish channel. And then we know, obviously, the rules are saying we buy low, we sell high, we buy low, we sell high, we buy low, we sell high. The market reaches this point. At this point, we understand that it reached the 3rd touch on our resistance zone. What we are anticipating? Well, obviously, we're anticipating for sales. What we have to do right now is to place our sell and be patient with it for it to go to our anticipated direction. How do we do so? Remind yourself, in as long as it hasn't hit my stop loss, that is when I would say it's a losing trade. If it has not hit my stop loss or closed manually, understand that it's still a pending loss. So, opposite of it is what? A pending win. You have to remind yourself about one thing. There is a pending loss and a pending win. So what is a pending win? A pending win, running profits on an active trade. Understand that in as long as the trade hasn't hit take profit or manually closed in profits, it's still a pending win. What do we mean by that? Let's apply it. It's opposite of what we said in a pending loss. So we buy low, we sell high. We buy low, we sell high. We buy low, we sell high. So when it reaches the 12th point, we understand that we have to be anticipating selling opportunities because we have a double confirmation resistance zone of which touches here is going to continue to go down. So we sell at this highest high, anticipating that the market would go down to our direction. Apparently, it does that too. You place your sell order and then the market goes into your direction. So when the market goes into a direction, remind yourself that in as long as the market hasn't touched your take profit or manually closed in between before hitting take profit, it is still a pending profit. It is not yet a win. You only say it's a win when the profits are closed and they are secured into your trading account. Let that make sense. In as long as profits are still running, it's a pending win. It's not yet a win. But after hitting take profit or closed manually, that is when you could say it was a win. When you are having a pending win, let it run. Only maintain or moderate your stop loss. Monitor it every time, because that's going to be able to make you a big profit in a long run. So moving to the third emotion. Emotions that impact trader is still continues at this point, but now we are facing what we call revenge. Funny how this sounds, eh? As we know as people, this is one of the utmost feeling that everybody has. But if you remind yourself that revenge is what's not needed in trading Forex. So, how does revenge happen? Revenge occurs after experiencing immediate losses in the market. The thought of the money lost is freaking you out. Trust me, you have to understand that the market can turn at any point, at any time. When it comes to trading NASDAQ, point number 4 says discipline is crucial. Never approach the market as if it owes you money. Otherwise, you register in your consciousness to a mindset of blowing accounts. Now, let's put that in an example. So, we're in a buying trend, obviously. We know we buy low, we sell high, we buy low, we sell high, we buy low, we sell high. Now we've reached our low, of which you can see we had the first touch, we had the second touch. Now we're having the third touch, anticipating the fourth touch. So when the market reaches this point, we know that we have to be doing what? We have to be looking for buying opportunities. So we buy low because we know that we sell high. So when the market reaches this point, we are like, nah, I'm anticipating that the market is going to be buying from this point. You place your buying orders. The market goes to your direction, but apparently it turns at any point, because remember the market chooses its direction. So it turns at this point, going down, breaking the support zone, turning it into a resistance, retesting and going down. And then you decide, hi, why did the market do this to me? Why is this thing happening? And then now, because you're thinking that the market has turned your support zone into a resistance zone now, you're thinking that, okay, let me close my buys because I've lost a lot. Now let me place sells. Only to find out that this was acting as part of what? A fake out. It was just triggering people who want to sell in order to change the direction it anticipated. Because remember, the market chooses the direction it wants to go. At the end of the day, you have to remind yourself that after experiencing a loss, move away from the market. This is going to help you calm down so you can review why was it a loss so you can improve. Bear in mind, what you can't review, you can't improve. Hence, I just made an example right now that in a bullish trend, we understand that this might be acting as a fake out to what? To trigger people who want to sell in order to go to what? The 2% that we have anticipated. Remember, as Forex GOAT Trading Academy, our most advice, we like turning our clients into being part of us. We want to trade in as much as like we are trading. You have to always form part of the 2% than actually forming part of the 98% of who loses. So we know this is what we call faking out. We understand that there are people always get triggered. So because we are part of the 2%, we would anticipate that this, as long as it hasn't hit my stop loss, it's not yet a loss. It's what? It's a pending loss. So I'd be patient enough for it to go back to my anticipated direction. So let's move forward. So now we're facing what? The last emotion, which is what? Which is greed. Now, when it comes to greed, this is the most dangerous emotion that any trader could ever experience. Trust me. It occurs into 4 stages. There is a beginner trader, there is a semi-pro, there's a pro, and there's a professional. How do we see this? We discovered that in the 4 stages, this is one of the dangerous emotions that anybody can encounter at any time. Meaning, it occurs into both wins and losses. How crazy is that? An emotion occurring whether you win or whether you lose. Wow, imagine that. You're winning, but you're still greedy. You lose, but you're still greedy. But if you can check in the previous 3 emotions I told you about, you could have discovered that all those 3 emotions occur only when you're facing losses. But this one occurs when you're facing losses and wins. And then, remind yourself, now we have 2 types of styles on how greed occurs. Remember, it traps people in both ways because remember, the market doesn't want to lose money neither. In as much as we want to profit, the Forex market doesn't want to lose. So, let me put it in the real practice. But first, let me explain to you. There is what we call greed in losses and greed in profits. So what does greedy losses mean? Holding a loss, hoping the market is going to turn into your favor. How funny is that? Staking buys or sells on a losing trade. Constantly moving stop loss below or above, not allowing the market to indicate if you are wrong. So I'm going to explain each point. So holding a loss, hoping it's going to go back up, and staking buys or sells in a losing trade. I'm going to make use of a consolidation pattern in this instance. So because it's the one that is most probably easy to use. So we have a resistance over here, which is acting as a ceiling, and then we have a support here acting as a ground. So we're experiencing an impulse move to the downside, we're experiencing an impulse move to the downside, to the upside, to the downside. Now, we're having 3 touches. Now we're experiencing 3 touches here on our support, and we're experiencing 2 touches on our resistance. So now, how does greedy loss appear? So basically, when the market reaches this point, you could have anticipated that it's on a support zone, confirming what? A triple bottom. So we're going forward for a buy over here. The market decides to break this support zone and turn it into a resistance zone and continue to go down. Now, you bought here, and then when the market reaches this point, you're like, it's gonna come back. Hoping. That's where hope comes in. When the market reaches this point, it goes up to your direction, and you're like, nah, I was right. The market is going back to my direction. I was right. The market reaches this point, you're like, let me hold. It changes the direction, goes down. Now you're not anticipating that it's changed the direction to forming a continuation pattern of a selling trend, but you still say holding a buy. You're like, nah, I'm gonna hope. The market goes down, you still say, it's gonna be buying, it's gonna buy, it's gonna buy. The market goes down, but you're still saying it's gonna buy. The market continues to go down, but you're still saying it's a buy. How can you not change your mindset and say, nah, the market has confirmed this is a change in trend. It's no longer buying, but now it's a selling. But you're hoping that it's going to come back. The market decides to hype you up a little, because that's what the market does. It hypes you up a little, it goes up, and you were like, nah, okay, here I was right, I knew it. The market goes down to a different direction. You were wrong. It does what? It blows your account. But if you could have closed your price or your position when it alerted you, this is a change in trend, you could have been safer, or you could have seen a change in price action and anticipated that it might as well change into a selling opportunities that might be looking for. So that is what I mean when you're talking about holding on a loss, hoping the market will turn into your favor. And sometimes it occurs in this manner. You can see that the market has changed its direction. As a human being, you're telling yourself that, nah, it's gonna come back, because you trust most probably in your own analysis. So you buy over here. The market decides to go down, retest, and then turn this into a what? A resistance zone. And then now it continues to go down. You keep on staking buys. Now you're having 4. Remember, the first buy was here. This was the second buy. This was the third buy. Now you're having 4 wrong positions on a wrong direction. Does it make sense? You're hoping for a buying opportunity on a selling trend. How is that possible? How can you constantly stack wrong positions on a wrong direction? Does it make sense? That is why we say staking buys and sells in a losing trade, and constantly moving your stop loss below or above entry, hoping that the market will go back into anticipated direction, not allowing the market to allow you and tell you that you were wrong. Remind yourself about one thing, guys. You pay a price if you're wrong, and you gain a reward if you're right. Allow the market to hit stop loss, because in the long run, it's going to help you to be safer into saving your account. Imagine, how nice could this be? You are in a buying trend, obviously. You just bought low here over here. And then the market, you put in a stop loss somewhere right about here using a charting stop, only to find out that the market triggers it, a retest, and goes down. You were out of that wrong trade. You saved your account. Now you can see, I'm looking for selling opportunities or something like that. That's going to be able to do what? Save your trading account. That is the utmost important thing. It's all about your account survival, not how many times it dies. So moving forward, greed in profits. So greed in profits is holding on a scalp entry, waiting to swing it by force. How can you swing a scalp entry by force? But when you know that it is a scalp entry, meaning in a scalp entry, you're looking for short-term profits. Then in a swing trade, you're only looking for what? For long positions. Point number 2, staking buys and sells on a winning trade, but now you are over risking. And then the third point, over lot sizing. high leveraging, high position trading. Wow. Now let me put this in the real market practice. As we know, the rules, with the rules is resistance and the support. Another one, volatility, movement. As we know, you buy low, we sell high. So the market reaches this point. Obviously, I like using an example of buying opportunities. The market reaches this point in a consolidation channel. We understand that we experienced the third touch from our support zone. We anticipating what? A buying opportunity. So what do we do at this point? As we anticipated our buying opportunities, we decide, you know what, let's go for a buy. We go for a buy over here. It goes to the right direction, right? And now when it reaches this point, you don't want to go out or need to put your stop, moderate your stop loss, put it above entry. You just like, I want to swing this trade. And then it can happen, it reverses back from your favor to your opposite direction, turning your best trade into your worst nightmare. Have you ever experienced that? Thought that you are in a good trade, you're trading quite good, you're doing quite good things, you're making huge profits, but then you're not moderating any of your trades. So at this point, you know it's a consolidation channel, meaning when it reaches the top, you have to close. So now you bought here. Luckily enough, the market changed the direction. You buy again here. It goes to your direction. You buy again. And then now, because you are in a lot of profit, you anticipate that you have to stack in a lot of buys and a lot of buys. Put in like 10 position. That is where what comes in. Stacking buys and sells on a winning trade. Now you are over risking, over lot sizing, high leveraging, and high position. That is when that comes in. You over high positioning, placing a lot of trades, and now you're even opening a huge lot sizes, forgetting that the market can turn at any point, at any time, and it goes to your unanticipated direction to blow your account. How bad could that be? You were in a good trade, right? You're in a good trade, buying, or neither selling, but then you didn't know what time to stop or the time to take profit or close the trade. And then now it's turning into your opposite direction, turning your best trade into your worst nightmare. So we don't want you to experience that. That is why we're going to teach you how to manage risk, how to use risk management, how to deal with greed in profits, and also deal with greed in losses. That is all for me. Nonetheless, FX GOAT, your mentor, signing out.